I want to show you a simple trading strategy that can get you making money today. Stay tuned for this episode of Market Thoughts. What's up, guys? I want to show you a really easy trading strategy. This is good for beginners. This is good if you are brand new to trading. This is good even if you've been trading for a while and you're an expert now. Let's talk about the setup. So I'm looking at the SPY, which is the ETF of the S&P 500, SPY. And what I have on my screen is the weekly chart. And I have 4 moving averages on the chart. Which 4 moving averages do I have? I have the 15 moving average, the 50, the 100, and the 200. Now these are simple moving averages, but you can also use exponential if you prefer. But I think it works better with simple moving averages. Let's get right into it. So let's start back here in January of 2022 when the market first started to crash. We see the market put in this big red bar here on the weekly chart, and everyone was like, what the hell is happening? And then everyone was like, what the heck is happening? And then it pulls back here and continues down. Now, we are not in a downtrend yet with this move. Why? Because the moving averages have not crossed. Now, crossing of moving averages is another strategy. That's not the one I'm discussing today, but I'll post another video on that strategy. Anyway, the market pulled back here, and then on this red bar here, this red bar, we have a confirmation of downtrend. Why? Because the moving average is crossed right here. The 15 crossed over the 50, and the red bar is breaking below these moving averages. So now you can say, I'm fairly confident we're now moving lower. So if you had gotten in this bar, the question then is, what is your next target? So this is where this strategy comes in. Your next target is the next moving average. So if you had gotten in here, what is the next moving average? It is this line here, the 100 moving average. And if you had stayed in, you would have made that target. So that's the whole beauty of this strategy, is using the moving averages as your target once you get into a trade. So then the market pulled back here, and we would not have bought here because it's in a downtrend overall, right? The market's in a downtrend. You don't buy against the trend. We would have waited for this next red bar. Then this next red bar broke this moving average. It broke the 100 moving average, and if you had gotten in, you would have said, what is my next target? Well, what is the strategy? You set the next moving average on your screen as the target, which would have been the 200. And you may say, well, it didn't quite make it to the 200, and that's true. So what do we do about that? So here's how the strategy can be adjusted. If you had only used the 100 and the 200, that would have been a little higher risk. If you want to minimize your risk and be more conservative with the strategy, what you can do is add another moving average. So here, I'll add the 150 moving average, which is in between the 100 and the 200, and I'll show that. And you'll see here now, the market made it right to that moving average, and you would have gotten out there and you would have had the win. So it all depends on how much risk you want to take. The more risk you take, the more reward you get, and the less risk you take, the more wins you may get, but the less reward you get. So then the market pulled back again, and we would not have gotten in here because it's still in a downtrend. We don't buy against the trend. And then it put in this red bar here, which broke the 100 again. It's in a downtrend, and it's putting in a red bar that's breaking a moving average. This is a good time to get in. If you had gotten in here, what would be your next target? Well, it would have been the next moving average, which is what? The 15, this blue bar. And you would have gotten the win there. And then the market consolidated a little bit, and then it put in another red bar, which broke this 15 moving average, but it went right into this 150 moving average, and it didn't break it. If I zoom in, it did not break the 150. So if you were using the more conservative strategy with this 150, you would not have gotten in on this red bar because it did not break the moving average. But if you were like me and you did not use the 150, you would have gotten in here because it broke the 15, and your next target would have been the 200 moving average, and you would have gotten the win. So again, it goes back to how much risk you're willing to take. The other thing you can do, you should always put buy stops, or if you're in the uptrend, sell stops, so that if it didn't keep going down like in this example, you still would have gotten out here and made some money. Safe trading. But going back here, then the market held on this 200 moving average and it went up, and we would not have gotten in here. You could have said, well, it broke this 15 moving average. I'm going to get in here and set this next moving average, the 50, as my next target. Well, you could have, and you would have won the trade, but that wouldn't be a safe trade because the market would technically still be in a downtrend until it holds the next pullback. And indeed, it does hold here on this 15 moving average. And then once it holds this average, then we can get in on this bar because it is a confirmed reversal of trend. It goes from a downtrend to holding the 200 to holding the next moving average. It's now in an uptrend. So you would get in on this green bar. What would be your next target? You guessed it, this 50 moving average. And you would have won the trade there. Now, if you were a little more aggressive, you could have said, well, it even broke this 50 moving average. I'm going to stay in. And if you did, you would have set this red bar, the 100 moving average, as your next target, and you gotten the win. And now this is where we are here. We pulled back to this 15 moving average. So now we have an easy setup for an upcoming trade. If it holds and the next week we see a green bar that breaks this red bar, I'm getting in, and my next target would be what? The next moving average, which is the 100. So that's how the strategy works. It works in an uptrend and a downtrend. However, no strategy works on its own. You have to consider the strategy in context when you're making a trade. There's no one-size-fits-all strategy. You have to say, are the other factors of my trade in place? And then you use the moving average as your target. You have to make sure you're getting into a good trade. And then you say, I'm setting the moving average as my target. You don't just get in on any bar that breaks a moving average. That's not how trading works. There's several factors that come together. So once you confirm you have a good trend, you can use the next moving average as your target. And you can set more moving averages to have a more conservative strategy, or you can set less moving averages to take a little more risk. And then you can always use buy stops and sell stops to minimize your risk. I hope that helps you. Like, comment, subscribe, request more videos, tell me what you want to hear about, and I'll see you next time on Market Thoughts.